Hey, it's Clay at claytrader.com. This will be my top 10 stocks as we head into Tuesday, July 19th. This will be a technical analysis breakdown. So if you're someone that uses charts within your trading, or maybe you're just interested in learning more about charts and how they can be used as a tool to help make good decisions as a trader, this will be a video for you. A couple of quick clarification points. The price you see over here and the candlestick right there you see will be moving as I go through the charts because the market is still open for a small amount of time. But I like to do these videos when the market is still open because sometimes you can capture some really interesting late day price movement. So keep that in mind. And then second, I'll be using the 30-minute time frame, meaning each one of these candlesticks, as they're called for you beginners, represents 30 minutes worth of time. So stock number one here, XELA, monster volume today, as you can see down here, and the price has been grinding higher and higher all day long. And, it was kind of bizarre because it was looking like things were, game over. The price had gone through this big downwards trend here, and then more recently made that big move up right there, which turned out to be a gap and trap as the price went right back. But now all of a sudden the prices come back to life again. And I go through all this because, while there are no guarantees, so I'm not saying that this action right here is guaranteed to do anything. All I'm saying is the last time the price really came to life like this, which was back here, you can see what happened next, ultimately turned out to be just a kind of a one-day wonder, and then the price just slowly drifted lower and lower again. Again, there are no guarantees, so I'm not saying that's what's going to happen here. I'm just saying that before you get too excited, don't forget to, factor in past history, which has shown that probably be smart to be a little bit more skeptical about this movement than if it never happened before. As far as areas of resistance are concerned, nothing fancy or complicated here. Just a question of where did the party momentum stop today? And that was right up there at that 14-cent mark. So keep an eye on that. But to be fair, maybe this is the start of something much bigger. And if that's the case, well, that's the idea of a watch list, to find unique situations, to find interesting ones, and not rush out and buy, but to watch them and see if they ultimately do behave in a way that fits your personal, trading strategy. So if this is the start of something bigger, it's better to be watching it now than too much, too further down the road when it's, too much, too little, too late is what I'm trying to get there. Next one here, MARA, and on this one, I like the fact that it pulled back here, and the reason for that is at least you can eliminate the worry of, oh, great, am I suffering from FOMO? Am I going to be the sucker that buys the top end? FOMO, fear of missing out, right? Am I chasing the price? And no, you're not. Now, that doesn't mean that it'll for sure be a winning trade, but the people that were, suffering from FOMO and buying the top, yeah, they're the people buying right there. So you got the pullback here, which now created a nice little pattern. And again, if you like to play pullbacks and, stocks that have nice upwards momentum, which this one has, so a whole lot of upwards momentum right here. And then we have this current pullback, which is occurring right here. And this would be known as a bull flag pattern. So if you like to play bull flags, if you like to play the idea of, okay, at least I know I'm not the sucker that's buying the top, I'm buying some sort of pullback, and the whole premise being that strength will return once again. And once that strength returns, prompting the price to, make another leg to the upside, or in technical jargon, get the bull flag breakout, then this is definitely one that I'd get on your watch list. Next one, AMC. Talked about this quite a bit last week, and that trend line right there. And in all actuality, it was kind of anticlimactic. I mean, it went up to it right there, stopped right below there. And I was, in kind of a selfish way, I was hoping that it would, open up right below it and then just get a great, beautiful breakout through it. But that didn't happen. It just simply gapped above it. And then after the gap up, you can see that opening 30 minutes, big green candle. And then from there, it just grinded higher and higher. So that trend line certainly did play a role. I mean, I'm not saying that it never did, but it was kind of anticlimactic on what ultimately turned out to be the breakout, as the price just said, see you later. We're just going to gap up above you and go on with their merry way. But nonetheless, though, AMC, very nice way to start off the week. And some well-defined levels here that need to be updated. First key level to keep an eye on right up there at $16.90. That's been a level of resistance from the past. And once again, that's right where the party eventually stopped today. I realize, yes, the price did pull back, but like the concept we just talked about, from that angle of things, well, at least you don't have to worry about being the person that's buying the top or suffering from FOMO. You did get the nice pullback here, and within the pullback has created some nice little areas of support. The main area of support, if you do like to play pullbacks, in my mind, right down there around that $16 mark, so keep a close eye on that. But overall, got that trend line breakout today, got some continuation. Yeah, late day today, it is taking a little bit of a breath, but overall, the trend remains upwards, and it's just a question of, if you believe this trend is going to continue, well, then you got a nice little opportunity here with the price pulling back. Next, ILAG, and I'm not quite sure what to think of this one. It may very well be game over, but to be fair, maybe it's not. And the level that matters to me, at least in my opinion, the most going forward is going to be all about this level down here at $2.80. And why is 280 such an important and such a helpful level? And I'm not saying this will occur, but for argument's sake and explanation's sake, let's say the price comes down to 280 and then breaks down below. At that point, what would you have? You would quite literally have the price having gone right back inside of that range that it just broke out of today. I mean, not to insult your intelligence, but price movements that go back to where they were, not exactly a sign of genuine power or true strength. But to be fair, I mean, nothing can go straight up. So maybe the price comes down here, behaves in that manner, then starts to work its way back upwards. What would you all of a sudden have in this situation? Well, you'd have a set of lows there. You'd have lows down there. If you envision each one of those as stair steps, what do you have? Well, now you have stair steps making progress in the upwards direction, and that is a sign of strength. Now, I do realize that there is the point of view of, well, if you're a day trader and you bought right there, or you bought right there and your plan was to buy and sell within 10 minutes. Well, then, yeah, from that perspective, you really don't care too much about this 280 mark. But from the overarching viewpoint of things, is this a good or bad looking chart? Right now, it is looking pretty shaky, but you also have to be fair and say, well, maybe it's just a pullback because the price does still have the opportunity to build a higher base. So let's see if it can stay above 280 or not. Next one, EVTL, which I'm completely talking and taking a different approach than what thought I was gonna be saying, because last time I looked at this, it had broken up above that red resistance line, which I talked about in Friday's video. It was looking great, but now check out the last 30 minutes. Last 30 minutes, very, very rough. It's pulled back and is now broken back down below that area of resistance right there. So I'm going to go ahead and get rid of that. And what makes it interesting is the support line that seemed to be totally irrelevant. I'm going to extend it out now. Seems to be right here in play. So that's going to be the big question mark in my mind, is what exactly is going to happen at this trend line right here. And once again, as I said already, that's the idea of a watch list, to locate unique situations and then watch them and see how it behaves. Because you know that there's going to be longs watching this saying, you know what? I think this thing wants to bounce and they could be going long. You know, there's going to be shorts and bears watching it saying, you know, if that trend line breaks, I think I might want to get short. Both of those people, I understand, I see their logic, but that's why risk management matters so much, because there are no guarantees. Somebody's always going to be right. Somebody's going to be wrong. But the point here being in the underlying theme is that this trend line is now back in play, as crazy as it seems when last time I was looking at this thing was breaking up, or I thought it was going to be breaking up through that $6 mark. So a very rough last 30 minutes. So we'll see if this carries into next week. As far as levels of resistance are concerned, key level going to be right up there at the 590 mark. You can see on 3 separate occasions, the price was rejected right at that level. But again, as of right now, at least, the most kind of pressing dynamic and most interesting dynamic is all about that trend line and whether or not it can hold as support. Really quickly, I wanted to pause the video and personally invite you to get signed up for this free live training event that I'm offering later on in the week. So if you've been enjoying what you've seen and you want to learn more about this tool, how it can and should be used to build consistency as a trader, then certainly get signed up for the free training. If you're watching on YouTube, there's a link down in the description box. If you're watching at my site, there's an area right there on the webpage that you can click to get signed up. So like I said, if you've been enjoying what you've seen and you want to take your understanding to another level and learn about why this is such a powerful tool and helpful tool, then certainly get signed up for that free training. Next one, NIO, which is a pretty interesting chart. I mean, I guess it's not interesting when you look and understand technical analysis. And what I mean by that is that pink line there represents the 200 period moving average, which, you know, even if you're a beginner, you probably realize that when the price is down below there, that level does tend to act as resistance. I mean, check it out. Huge opening 30 minutes, got rejected at that 30 minute. And then the rest is history. Got rejected at that pink line several times before finally just running out of energy and then dropping all the way back down. But what's interesting about the drop down here is that the price not only went down to the purple line, the 50 period moving average, but is now broken down below that. So, I mean, just how bad is this breakdown going to get? I mean, are we looking at something where this momentum is going to carry it all the way down to potentially these areas down here where it bounced from before? I'm not saying that per se, but I mean, this was a big rejection off that pink line there. So at this point, in my opinion, at least this $20 mark could very well be in play over the next couple of days. We'll see what happens with it. But also, to be fair, if the price all of a sudden recovers back up to that area, you better believe that every breakout player and their brother's uncle is going to be watching that pink line. And when lots of people are watching the same level and wondering the same thing, call it a self-fulfilling prophecy, call it whatever you want, it can certainly produce some very dynamic movements. But yeah, as of right now, a very nasty rejection. And it's just like I said, question number one right now is how nasty is this rejection going to turn into? How much further downside does it have? So let's see if $20 doesn't indeed come into play over the next couple of days. Next one, TSLA Tesla. And first I'm going to do is extend this trend line out, which I've talked about in past videos. So let's get it extended back out. And you can see that it has become very, very relevant now moving forward for actually 2 reasons. One, well, yes, because it's the trend line. But number 2 is, and it's kind of hard to see. In fact, let's do this so you can maybe make it easier to see. When you look close there, there is this purple line, again, that 50 paired moving average. So both these areas of support have now converged and are basically the same exact thing. Does that mean that for sure guaranteed the price is going to bounce? If only trading were that easy. But is it plausible? Is it valid to think that these dynamics converging could provide support and cause some sort of bounce? That is not unreasonable at all. So I'm going to be very curious about, does this area right around the $720 mark ultimately provide some sort of bounce back to the upside? So that'll be the main area of support that I'm watching. In the event the price does continue to the downside, then I'll be very curious about that pink line 200 paired moving average as an area of support, which is right now valued at 708. If there is any sort of attempted bounces though off that trend line, then main area of resistance going to be right there at that level, which sits at 731. So again, if the price does try to bounce, I'd reserve any sort of excitement until the price can prove that it can get up above and stay above 731. So don't get me wrong, this is a nice little final 30 minutes, nice hammer candle forming. But like I said, I'd be a little skeptical until it can prove itself more by not only getting up to 731, but being able to stay above it. Next one, QD, and I'm putting this one on here for one reason alone, and that is the ability to draw this trend line right here, which I bet a lot of people have drawn. So going back to the idea of self-fulfilling prophecies, when a lot of people are watching the same area, wondering the same thing, does not guarantee anything, but is it plausible, is it valid to think that if the price turns around, gets up to that trend line and breaks up through it, that in and of itself could create another round of momentum? In my mind, yeah, that is a plausible outcome that could occur because, like I said, I'm not trying to impress you with my skill to draw that trend line. I think that's a trend line that a lot of people have drawn and will be watching from the breakout standpoint. So sometimes watch list alerts are as simple as that. There's a key trend line. It's a trend line that I deem a lot of people are probably watching, and you don't have to make things overly complicated. Let's just watch that trend line and see how the price behaves with it over the next couple of days. Next one, AMD, and with AMD, the first update that comes into play is just based on a foundational rule in charting, which states when levels of resistance are broken and closed above, you want to see them act as support, and that's very relevant because you can see late day today with that pullback, the price has basically come right down to that former breakout point, and so far so good. You're now getting a hammer candle form that last 30 minutes. So like Tesla, does that mean for sure guaranteed a bounce is coming? Of course not, no guarantees. But is it rational? Is it a logical thought process to have from a technical point of view? Absolutely. So from a risk-reward standpoint, I can't say that you're guaranteed to make money, but I see your rationale, and I can understand if you find this dynamic around this $81 mark very interesting, because as of right now, it's looking like classic technical analysis. Breakout, coming back down and back test the breakout point, and we'll see if this last 30-minute hammer candle is indeed some sort of leading indicator for some upwards movement to come on Tuesday and Wednesday. As far as areas of resistance, keep an eye up here right around 84.25. That was essentially where the party stopped today. But like I said, overall, I think the most interesting dynamic is going to be, does this last 30 minutes mean anything? Let's see what happens. Next one, TQQQ, and this is just a leverage ETF where if you think that the Qs, or in other words, basically the NASDAQ is going to recover back upwards from this pullback, and this is a way that you can just play the general tech sector as a whole with a little bit more leverage behind it. And like these other tech stocks, nothing new here, which is why I wanted to end with it, because you've seen this before. The price broke out, has now pulled back, and is now finding some support, now finding a nice candle forming at support. And in this specific situation, the quote-unquote nice support is the combination of that pink line, which is the 200 paired moving average, that purple line, which is the 50 paired moving average. You can see they're basically one and the same. And then check it out, getting a nice hammer candle here. So does that mean that the NASDAQ is going to bounce back upwards on Tuesday once more? No, of course not. No guarantees, but nobody could accuse you of throwing darts or being random if you came up with the idea of, my premise is I think NASDAQ, I think tech stocks are going to get some sort of bounce on Tuesday because of this nice pullback and the hammer candle that's forming at these moving averages. I completely see the logic, but again, no guarantees. So that is why risk management must be factored in. But if you're somebody that doesn't want to, tinker around with individual stocks, you just want to play the entire NASDAQ as a whole with a little bit more leverage behind it, then right here, the TQQQ will allow you to do that. So that wraps up the top 10. Again, if you like what you saw here and you want to learn more about this tool, how it can and should be used to build consistency as a trader, then certainly get signed up for the free training. Like I said, it'll be later this week, Thursday, July 21st at 7 p.m. Eastern Time. So I hope to see you there. As far as these top 10 videos are concerned, if you enjoy this format, if you would like for me to continue to make these videos, then do two things for me. Hit that like button, leave a simple comment down below. Those two things communicate to me that you're enjoying, and as long as I know that you are continuing to enjoy, I will continue to put in the required time and effort to get this content out to you. So again, get signed up for that free training. Hit that like button, leave a simple comment down below. Everybody take care. Have a good one.